Hi, this is Emily Platt from the Wealthspire Investment Team, and welcome back to Markets in 2 Minutes for the month of March. Today, we're zoning in on a significant trend, the surge in credit card debt. As illustrated by the chart on the left, we're now looking at credit card debt surpassing 1.2 trillion. In the current inflationary climate, it is something to monitor, although some of what we're seeing going on is the unwinding of COVID era extremes. 2024 is poised to be a pivotal year. We anticipate a shift in consumer spending habits, adjusting from previous years of heightened expenditures driven by substantial fiscal stimulus. A concern arises when we consider the average interest rate on this debt is now above 20%, a peak not seen going back to the 90s, as depicted by the chart on the right. Interest expenses have seen an increase, and a closer look reveals a 37% jump in the amount individuals are paying just to cover interest alone. Another chart presents data on interest payments. Following the '08 financial crisis, we observed a drop in rates and a reduction in balances, leading to the line here dropping below 0%. However, for the first time since then, we're not only seeing balances rise a bit, but the interest expense component has surged. Incorporating interest expenses into the consumer price index, one measure of inflation used by the Fed, would reveal a much higher inflation rate than currently reported. This discrepancy helps explain why consumer sentiment appears weaker than what a robust jobs report might suggest. The tighter labor market does provide some relief, as income levels have generally kept up pace with the overall growth in credit card debt. Yet individuals earning below the median income are facing a disproportionate increase in debt, which outstrips their income growth. We are seeing positive data points, including household debt service as a percentage of household income remains at the lowest levels we've seen in the history of the data set, as well as credit card delinquency rates, which remain at the low absolute levels. While this dynamic persists, the likelihood of a widespread consumer downturn akin to an '08 crisis seems remote. Nonetheless, it's a development that we're monitoring closely over the next year. With that, thank you for listening to this month's Markets in 2 Minutes.